Thanks for joining me today. Obviously, a big week in the capital markets and the equities world in general. Wanted to chat with you and get your thoughts on, now that we're post the election, you have a change in administration. How do you think investors are reacting to this, initially, and how do you see things playing out over the next couple of quarters as we move toward the end of the year and into the new year?
Our initial conversations with investors post the new administration turning over, I think investors are generally optimistic, given we're sort of behind a large overhang on the market. Now that we're past that, I think investors can move forward with a little bit of clarity in terms of policies and procedures that may come into play to impact single name equities as well as the market broadly. That could relate from anything to taxes in particular to single name stocks as well that could impact certain sectors, like we saw, shortly after the announcement, financials and industrials and tech and energy stocks all sort of performed well over the last couple of days after the election. And now that we have the overhang of the election itself behind us, we have more sort of guidance in terms of how we'll move forward.
So Shaival, when you think about the IPO market in 2025, how do you see things playing out with investors as we flip to a new administration and people are getting comfortable with a different market? What do you think about that environment for deals coming into next year?
Investors that we speak to have been doing testing the water meetings sort of throughout the year. But to your point, the IPO market has been generally fairly light. People are fairly optimistic that 2025 will be one, a catch-up year, but also just new issuance coming to fruition that people didn't expect to come. And I also think that sort of ties into the market for strategic alternatives broadly, which seems sort of ripe given the change in administration. People are optimistic in terms of getting deals done in a fairly less regulated environment. And I think people are also optimistic that certain sectors will benefit versus others, and they'll be able to capture some of that upside.
What's interesting, and I think what we're going to see in 2025, with which we've been missing for the past couple of years, is really the small cap transactions, right? IPOs in that 150 to 300, $400 million range. The move of the Russell 2000 over the last couple of days post the election, in my view, is really indicative of investors being willing to step out a little further on the risk spectrum and not just go for the big, well-known transactions, but really broaden their footprint in terms of where they're putting capital to work. And you're hearing that from investors, that that's something they're interested in doing going forward into 2025?
Yeah, I think in our conversation with investors, people are more open to broadly looking at areas of growth and great companies, right? The last several years, we've sort of seen investors sort of gravitate into certain names that are more defensible and more tried and tested. And I think now folks will be more inclined to, look at companies that they may not have historically looked at. And I think that bodes well for the IPO market for the Russell, as well as potentially the M&A environment as well. When you look at some of the smaller cap companies where stocks have sort of been propped up and trading at all-time highs, a lot of times you have management teams that are looking for strategic alternatives for those particular companies, the appetite of which we have more clarity post the election allows them to either take the approach of an IPO or an M&A transaction.
Yeah, no, I agree. And Shaival, one other topic that I want to discuss is sponsor IPO activity. We've seen 3 recent very successful transactions. And when you think about that, that's a huge part of the IPO market. And we saw a ton of activity in 2020 and 2021, but really we've been missing that for the last couple of years. So when you think about those 3 successful transactions that just happened, how does that present itself as an opportunity for sponsors relative to doing, a continuation vehicle or a strategic sale of an asset? How does that IPO window open up for sponsors in 2025?
The alternatives for a sponsor deal are definitely more beneficial now that we have more clarity moving forward. And I think when we think about involvement from sponsors, their appetite has always been there. It's just been, there just wasn't much guidance in terms of what would be in the future. And I think now that we sort of have that, we should see more appetite from sponsors to be more active participants, and also for that market to ease up a bit.
Yeah, look, I think the volatility coming in a little bit and investors and sponsors both getting more realistic about valuations should help drive more liquidity in that market. And that's certainly what we're seeing right now between the recent transactions, also some of the secondary sell downs that we've seen. But hopefully that's an area that we see come back strong in 2025 because it is a key part of the market.
Yeah, I also think that if the corporate tax rate does come down, it'll make the appetite for some of these deals to be to be a little bit stronger simply because, companies will be flush with more capital that they can do more with, potentially pursue strategic alternatives and do deals with sponsors.
Let's pivot to rates for a second. And one of the things that I was really surprised by was how much the market indices went up the same day that rates gapped out. And usually you don't have those two things go hand in hand. Where do you think that'll have an impact in terms of equity investors and their appetite to put capital to work?
Shortly after, the 10-year sort of spiked to almost 4.5%, and that was pretty interesting. It all sort of ties into the appetite of issuers potentially wanting to do more. And sort of when we think about a rising rate environment, when we think about the convert market in particular, right, bond issuance, I think that market is sort of ripe for significant deal activity. I think in a bad year in the convert market, we have about, 20 to 40 billion of issuance. And next year is sort of setting up to be pretty robust in terms of, call it the 50 to $75 billion range. And the Fed have sort of told us more or less what they're going to do. And given we sort of have that behind us, irrespective of the election, it sort of sets up well for at least knowing the trajectory of rates into 25.
Yeah, couldn't agree more. We're seeing just a ton of pickup right now on the convertible side. I think you've got investment grade issuers who now had thought that their funding capabilities going into 2025 were going to be a lot easier with rates coming down. But now that rates have backed up again, all of a sudden we're seeing a lot of IG names who are really interested in the convertible product who had kind of pivoted away from it over the last 4 to 6 weeks. But all of a sudden we just see a ton of inbounds and demand from issuers thinking about where convertible rates are relative to straight debt. And then the other thing that I think you're going to see next year, which supports what you're saying about the 50 to 75 billion, is the fact that you have this massive wave of issuance that happened during COVID in 2020 and 2021 that needs to get refinanced.
Yep.
And a lot of those deals, because of the exuberance of the equity market at that time, are way out of the money. And you're going to have issuers look to do new transactions to repay those as they come due. But anyway, I do think it's going to be a really robust year next year in the equity capital markets, both on the straight cash side, both IPOs and follow-ons and converts. And look, really appreciate you taking the time today to give us your thoughts. Hopefully we'll have a very busy 2025. So appreciate everyone listening. And if you have any questions about your capital markets needs, please reach out to your Mizuho professional. Thank you.